Welcome to our weekly Forex and Futures forecast. My name is Jay Norris. As always, we need to remind you that trading is a risky endeavor and not suitable for all investors. We hope you take a look at our third book now, The Secret to Trading, Risk Tolerance Threshold Theory. Really, this spells out our philosophy in trading, and it also teaches how we determine which market to trade and which direction to trade it from. Very heavy book. We're very proud that it's doing well. It's actually the number one selling book for commodities, number 4 in foreign exchange. Today, of course, those rankings go up and down hourly, so we're all very grateful for those of you that have bought the book. Let's get right to the markets. The first market we're looking at is the Australian dollar. It's a pretty darn bullish looking chart. You see that long-term trend line. Let me pop out to a weekly. I think really to put things in perspective, we need to cover the gold market first, and you'll see why. Now, this is a pretty bullish market right here. You know, it almost looks like it does look like you've been in this deep consolidation period now for a long time, and it looks like you may be coming out of that, right? That's going to be fascinating, that long-term trend line. So I'm pretty bullish here overall. Long-term, I think you have to be pretty bullish here. You don't have much in the way of resistance here. If you can get through that, we think that you have quite a bit higher to go. But let me go to gold first. Let me switch things up, and I'll explain why gold is so important right now. Gold just basically they took it out back and shot it in the back of the head last Friday. What's interesting about this chart? Well, it was down hard all day, but it literally collapsed. Here, look at the 4-hour chart. Let's look at a 4-hour chart. Look at it. The second half of late in the session, it just collapsed like that. So what this means is you're going to have a lot of margin calls come Monday. Okay, the brokers are going to have to be trying to get in touch with their clients. The clients, aren't going to want that to happen. But believe me, you're going to have a lot of margin activity, a lot of people being forced to close out their gold positions based on the trading activity here. We'll come back to this chart, but that will have a carryover effect in these other markets. Traders going to have to make that decision. Do they get out of their gold? They may even have to raise cash. They may not have the cash in the account to offset that big spill off. So it'll be interesting, and this definitely will spill over into the other markets. So I'm pretty bulled up on Aussie here. Yet I know that there's probably going to be some pretty good margin activity. You're going to have clients having to raise cash coming into the new week, so that could spill over into asset class market like the Aussie. But longer term, Aussie looks pretty positive. We're big on buying dips and uptrends, and I think the big picture here is an uptrend. Here you can see it. Let me go all the way out to a monthly. There you can see that big bull market, and essentially you've got a bull market and you've just been consolidating. So if you have a breakout here, we think you could even go beyond the 2011 highs. And how gold's going to play in that? Well, short term, gold is bearish. The margin activity is bearish, but long term, we think it's bullish for asset class markets that the gold collapsed like that, because basically you take gold out of the picture. You take away gold as a choice to put your money. So a lot of people, that's definitely how they will view it. That trouncing the gold that'll spook people out of that market for some time to come. Where's the money going to go? Well, the Aussie dollar used to have a pretty good yield there, right? Now, 3.5% doesn't sound like a lot, but at 10 to 1, 35% annually, yeah, that's real money. So we think that long term, you're going to see Aussie continue to pick up a bid based on what Bill Gross at PIMCO calls the least dirtiest shirt in the closet, right? You've got a pretty good yield there. There's not too many places you could get that yield. You still have a AAA rating for the Aussie banking system, the Reserve Bank of Australia. So that's no doubt about it. It's still a viable choice. And if you think about it, the U.S. 401k market, they're just starting to hear this. They're just starting to pick up on that. So we think there's more room on the upside longer term. Short term, though, you could see some choppy waves here, some choppy going coming into the new week because of the drama in the gold market. Euro market next coming up. Euro is interesting. I think overall we're where we should be, being bearish, focusing on that overall primary trend. However, shorter term, again, the drama in the gold and a potential breakout in the Aussie, coupled with a pretty bearish seasonal for the U.S. dollar right around now, could mean more upside for the euro. it was interesting. Our clients who focus on shorter term patterns, they were actually on the long side. They started to get in on the long side, started taking buy signals in the euro this weekend, and those signals were working. So, your shorter term traders, if they're getting paid for those buy signals, they're going to stay on that. Good traders like a dog on a bone. If it's paying you, you're going to stay on it. So we think potentially there's upside here. Definitely an interesting area on the chart, just above from 32.5 up to 34. You have a day-to-day zone there possibly. But you know what? If you do get a blow-off, a breakout in the Aussie, potentially that's going to be supportive of the euro too. So, I can't rule out a double top, really. Realistically, you've turned the corner here. You have momentum. Hey, overall, we're still bearish. Definitely, we'll keep an eye on these levels. But if you got things going on the downside in the dollar, especially now that you took away the precious metals, not as though the precious metals had been attracting a whole lot of institutional funds at those levels, but they there was money going in there nonetheless. Right now, that spigot's going to get turned off and it's going to get redirected. Where's it going to go? Well, you never quite know, but I would suspect Aussie's a viable alternative, and again, if that brings about dollar weakness, by default, that's bullish for the euro, right? So, interesting times, as always. Next market would be dollar yen. And now, dollar yen, by the way, this potentially supports that weak dollar thesis also. Dollar yen finally got to our upside target of par 100. We would see support, we could see realistically a correction back down towards 95, 94, 95 in there. So how much upside do you have here now also that it's gotten to that power level? Don't get me wrong, it's still a bull market, but it potentially dollar yen at that 100 level and having turned around pretty good on Friday, potentially, that would be supportive of a weak dollar. Also, it is dollar yen, so if you see this market turn around, you're going to see serious dollar weakness, right? So again, that bleeds through, potentially supportive of the Aussie. I would say supportive of the Aussie, probably supportive of euro, US dollar also. And this is a market that speculators have made a lot of money in, right? And speculators being speculators, I'm sure they had gold holdings too. So the question is, do you blow out of your gold after the big down day, down like nearly $100? Well, it was down over $100 on the week. So do you blow out of that, or do you exit other trades? A lot of speculators, they'll get caught up on this and they'll thinking, well, I'm going to take profit I'm going to take money out of dollar yen to offset those losses in the gold rather than have to blow out at the bottom. And who knows? I mean, they could be right in doing that also. But for going into this week, the gold market is really going to have an outsized effect on things, certainly until they clean up those margin calls, and that may take till midweek. So here's another piece of the puzzle that could be supportive of a big breakout in the upside in the Aussie US dollar, which would probably be supportive of the euro US dollar. Let's cover gold again, and we'll give you potential downside targets here. Boy, that's a daily chart. Interesting. Here's the volume pattern in there. If you're going back well over a year, and you look at where the majority of the volume was, it was right around this 16.5 level. So the majority of players over this time are long, basically from 16.5. Boy, you're $175 underwater. That's a big move. We don't see this market getting off the mat anytime soon. I mean, literally, the central bankers don't mind seeing this at all, by the way. They finally, I think they've been digging the hole for a while, but last week they literally escorted this market out the back door and put a bullet in the back of its head. As far as downside for gold, realistically, I'm looking at 1342. You're in the 14 handle now with the volatility you're seeing now, and what I know about commodities. I spent a good deal of time in the commodity market, and these things, they just don't shake themselves off right away. I think we'll probably see the 13 handle given the momentum that we have in place now. Looking at your other commodities, they're kind of falling in line. Here's crude oil. We love seeing this. Yeah, this is great for the economy, too. We'd like to see crude cheaper, in fact. Again, this would be supportive of the big moves in the U.S. stock market, a potential rally in the Aussie, too. So we love seeing the other commodities following gold lower. We'd like to see more of that, and that would be good for everyone. There's a trend line you're looking at. So we'd love to see more downside for the crude. Here's copper, HG. I haven't had a chance to look at copper. Yeah, there you go. There's some pretty good downside there to copper. So you're seeing lower prices there also. Really lower prices across the board. And here would be corn. And we haven't gotten to the stock market. We'll get to that next. Here would be corn. Food, obviously very important. Corn held up okay Friday. Nonetheless, you saw that big sell-off that we saw a couple weeks back, and this is why we are advising clients, hey, you want to be hedging your commodities. We talked about that for the last couple of weeks in the gold market. We've been highlighting that for about a month in the corn, and that's why financial futures, Forex markets were designed as hedge markets to help investors, not necessarily all speculation, although we see the majority of players in there tend to be speculators. The U.S. stock market would be the last market we're going to cover. That's the all-time high. You're seeing that level right there. I go to a monthly chart, and here's what's interesting for me. There's always two sides to every market. A lot of players look at that chart and they say, oh, yeah, you're at resistance. Well, you better take some profit off the table. Well, maybe that's a good idea, take some profit off the table. But at the same time, you're looking at a potential breakout here. And again, you'll probably see some turmoil, some drama in all these markets as they get these margin calls sorted out in the commodities. But I think long term, it's a bullish event for the stock market, especially that crude oil. You can get crude oil going down. Potentially, you can look at a breakout in the stock market. That's what, a 15-year sideways market. So there's the potential for a breakout there, and nobody's talking about that. No one's looking for that. They're all still bemoaning the fact that the market went up without them, and they're trying to figure all this out. Well, potentially you have a breakout in the stock market, and that may be worth something looking for. So definitely interesting times as we get further into the spring of 2013. Hey, if you want to know more about what we're doing at Trading University, you can come and see us. You click on our education tab there, and you can come and demo us. You can click on market commentary. You can see this video along with our other videos and our Seeking Alpha blog. So we look forward to seeing you there. If you want to get a quicker start, you can always come see us at our partners at EOS Trade. If you open up a Forex account or futures account with Forex.com, FXCM, Open eCry, FXDD is now in the mix also. You can have access to our Masters Trading program for free. Hey, thank you so much, and we'll see you next time.